Welcome to the live silver market reaction as we track today's U.S. price moves, analyze what's driving the market right now, and break down what could happen next. This is today's real-time look at silver pricing and sentiment for March 1st, 2026. We'll be diving into the data, the drivers, and the story unfolding in the market right now. As always, remember, this video is for educational and informational purposes. This isn't financial advice, but a live breakdown of the silver market dynamics as they happen. Let's start with the latest price action, because this is where the story begins. According to updated market data from global commodity sources, spot silver is trading around $93.7 per ounce today as of the latest quotes. That marks a significant move into the low 90s, which traders have been watching closely over the past few sessions. And this price strength has come in the context of broader market volatility, especially with futures on the Comex surging nearly 6.5% in a single session, pushing buyers deeper into the market and breaking out of recent ranges. This move isn't normal for silver. Typically, the metal trades in tighter ranges, but right now, momentum is building, and we're seeing an unusually strong uptick in demand from both strategic and speculative traders. Now, let's talk about why this move is happening right now. The most dominant thematic driver across global markets today is geopolitical tension, specifically rising conflict in the Middle East. Multiple reports confirm that U.S. and allied military action involving Iran has triggered a flight to safety among investors, and gold and silver have both climbed as a result. What's important here is that silver is rising at a faster rate than gold right now, which is unusual, but tells us something about investor psychology. Silver's dual nature, both an investment hedge and an industrial metal, is causing it to behave differently from gold in this environment. We've seen news headlines all over the world today that reflect this safe haven rush. Market commentary suggests that silver and gold prices are expected to surge again once trading resumes, as risk sentiment grips global markets and traders position for higher volatility. Couple that with current price behavior, a breakout into the mid-90s, and you get a picture of a market under pressure from both macro and micro demand drivers. Let's unpack these drivers one by one. First, geopolitical risk and safe haven demand. When major conflicts escalate, especially those involving key oil-producing regions, investors get nervous. They seek assets that preserve value. Silver, like gold, is traditionally a safe haven asset, but unlike gold, silver also has strong industrial demand, which means it doesn't just rise on fear alone, it rises on real demand fundamentals too. Second, industrial demand and structural deficits. Multiple commodity analysts have noted that the silver market is facing significant supply tightness heading into 2026. Global supply is just barely rising, while demand, particularly from sectors like solar panel manufacturing, electric vehicles, semiconductors, and green technology, is rising much faster. This structural shortage over multiple years means that when demand spikes, even from investment flows, there's less metal available to meet that demand. Third is futures market mechanics and Comex stress. There's been a lot of chatter in trading communities, both mainstream and niche, about the shrinking inventory held against futures contracts. Some analyses show registered silver backing futures has been steadily falling, which means physical silver is being drawn down as traders take delivery or shift positions. This kind of inventory drain can put upward pressure on prices, especially near major contract delivery dates. Reddit. So let's summarize. Geopolitical safe haven flows plus structural supply deficits plus futures market tightness equal strong bullish conditions right now. Now let's talk about the market's internal dynamics and sentiment, what traders are thinking and positioning for. Right now, silver's relative strength versus gold is catching a lot of attention. Reports indicate silver has been outperforming gold in 2026, achieving successive monthly gains and drawing more flows due to its combined investment and industrial demand attributes. That's important because it tells us that the market isn't just reacting to fear, it's reacting to fundamental demand pressures. Market watch. From a technical standpoint, the metal is trading above key psychological levels like $90 per ounce, which used to act as resistance. Breaking past this zone has flipped it into support for many traders, and the next key resistance zone watchers are eyeing is near $95 to $100 per ounce, with some analysts setting targets beyond that if the geopolitical backdrop deteriorates further. However, we're not just seeing headlines and price moves, we're seeing market structure shift. The sharp price movement has pushed technical indicators into overbought territory, meaning we could see some short-term pullbacks or volatility spikes around major news releases or U.S. economic data prints. Speaking of economic data, another backdrop to this rally is inflation and monetary policy. Rising inflation expectations, often driven by unexpected inflation prints like PPI or CPI, typically boost precious metals because they erode the value of cash and bonds. While we don't have new inflation data today, the prevailing market sentiment is that inflation concerns are persistent, especially if geopolitical instability disrupts energy markets, which feeds into inflationary pressures. So where does the market go from here? Let's break this question into two parts, the short-term and the medium to long-term outlook. In the short term, as markets open this week, traders are closely watching how silver responds to Monday's trading session. Many forecasts are calling for continued volatility with potential upside targets around $100 per ounce if safe haven flows remain strong. Traders should be ready for gap openings, rapid swings, and wide price ranges. This is not a calm market. FX leaders. At the same time, risk management is critical. When prices move this fast, profit-taking and quick retracements are common. If silver spikes rapidly early in the session, it could see sharp intraday pullbacks as traders lock in gains, only to flip back into buying if the broader narrative remains intact. In the medium to long term, the structural supply deficit in silver suggests that prices could trend higher overall, particularly if industrial adoption continues to expand and new applications draw more physical demand into the market. Analysts from major financial institutions have issued forecasts that range widely, some conservative, some extremely bullish. But a common theme is that silver could see sustained upward pressure throughout 2026 if these fundamental drivers persist. However, it's important to remember that markets are dynamic. If geopolitical tensions ease or if central banks tighten monetary policy unexpectedly, the safe haven bid could weaken and prices could correct sharply. Likewise, if supply bottlenecks ease, for example, if mining output accelerates or inventories are replenished, that could also take pressure off prices. So here's what traders and investors should be thinking. Watch key levels, support around $90 per ounce, resistance near $95 to $100 per ounce. Monitor news flow closely, especially geopolitical developments, U.S. economic data, and central bank communications. Expect volatility, not just directional moves, but wide swings within trading sessions. Balance safe haven positioning with risk management, because sharp reversals are possible in either direction. In closing, today's silver market reaction shows a market that is alive, responsive, and driven by real-world events. Prices are moving not just because of technical breakouts, but because of fear, demand, and strategic positioning. Whether you're trading, investing, or simply watching, this is one of those periods where staying informed and staying calm matters more than ever. Thanks for watching this live silver market reaction. Drop a comment below with your prediction for silver this week, and don't forget to like and subscribe for more real-time market analysis. Keep watching, keep learning, and I'll see you in the next video.